Philippine shares closed flat on Monday with the main index picking up less than 0.1%. Joining us now for more in the markets and the global factors at play is Jose Miguel Liboro. He's the Vice President and Head of Local Markets at ATR Asset Management Trust Corporation. Hi, Jose Miguel. Welcome to the Market Edge.
Hi, morning, Stanley. Thanks for having me.
All right, let's talk about the U.S. markets now. U.S. investors on edge on tech earnings with, of course, 2023 performance quite hard to top. If you recall correctly, this was one of the reasons why there was robust trading and great prices in the latter half of 2023, mostly concentrated on these tech stocks. Now, how do you see, in fact, tamer performance now from these issues this year? Because the recent price gains in the U.S. markets was mainly driven by tech, and a lot of investors are eager to see if, these companies will outperform their 2023 performance.
Sure. I think you kind of answered your own question there. Yes, we do forecast, I guess, more muted returns this year, but we're generally still positive. I think from a macro standpoint, it looks like global equity markets should still be able to push higher, tech being among the leading sectors still. But given the higher base already, probably more marginal or muted returns than what we saw over the last year.
And how do you see the general global market performance today following a slight easing of tensions in the Middle East? Because we saw global fuel prices decreasing, reacting favorably. As for stocks, we've even had some recovery yesterday at PSEI. Is this something that we can sustain?
I think very difficult to predict how these geopolitical risks are going to play out. But generally speaking, as long as there isn't a significant escalation, and in fact, as you pointed out, a bit of a de-escalation and more of that, hopefully, then yes, from a fundamental standpoint, I do think that there's a lot of room for the markets, particularly locally, to push higher. So we just have to make it through, I guess, the noise.
All right, let me just bring in the opening numbers at the PSEI. We opened at 64.44, and now we're 1/3% up, 64.83, just a few minutes after trading. Now, when you talk about Philippine shares, now trading in the 6,400 range, dragged, of course, by the Middle East conflict and the extended rate-cutting horizon by the BSP, which the market is also repricing. Are we expecting another season of lackluster trading at PSE, given the thinning trade volumes, really?
I think very important to remember that over the first quarter, we actually had a fairly substantial start. Quite a sharp move up and then an increase in trading volume as well. So realistically, it would have actually been very difficult to sustain a linear move higher in that manner. So while of course a bit volatile, the recent pullback we've seen, I think, lays the foundation for a more sustained move higher throughout the year. We do expect volumes to pick up after the recent round where they've suffered a little bit, but we are positive in the market. We do see opportunity for recovery.
And at this point, your best case for support and resistance for this market?
Sure. When we broke the 6,500 level initially, the fear is actually that we enter the next technical range, which is the 6,200 to 6,300 area, a range of levels that we unfortunately are all too familiar with over the last few years.
But we didn't.
While it's not impossible, while it's not impossible that we go back to those levels, certainly, especially if there is indeed an escalation in geopolitical risk, the fact that we haven't kind of just instantly gone back there on the break of 6,500 is, I think, quite optimistic, quite positive. And given the relaxation or de-escalation we're seeing, I think that the fact that the market has held, even having no significant reason to at that point, from a short-term standpoint, is positive and that supportive of an up move.
Yeah, but the journey towards 7,000 is really difficult to hit at this point. We're looking at resistance levels of 6,700. Is that still the same for you?
From a technical standpoint, yes, absolutely. We would run into some difficulty, maybe initially at 6,500, then, as you pointed out, 6,700.
Okay.
But from a fundamental standpoint, I think that there's more than enough, I guess, macro rationale for us to get and breach those levels. We're actually looking still at, while optimistic at this point in time, an above 7,000 close for the end of the year still.
Okay, let's look at other investment instruments now. What opportunities do you see outside stocks right now? I mean, are bond yields also as appetizing for investors looking away from risky assets at this time?
I think over the last 2 years, maybe part of the reason why the equity market has lagged has been that has been the prevailing theme, with bond yields over the last 2 years, outside of 2018, having been at the highest absolute levels in over the last 10 years. So that's still very much the case. We are off the highs that we saw last year, but just below them. So yes, I think right now bond yields are still a very enticing prospect, and not one that we expect to stay this high for long.
All right, let's talk about specific sectors now. We know that the high interest rate environment will affect growth, especially for sensitive stocks or interest rate sensitive stocks. Now, how are you seeing expansions for these companies for the rest of the year, given that those rate cuts might come the much later part of the year?
I think it might give a little bit of an adjustment to planned capex programs, but I don't think it alters them significantly.
Okay.
While of course the conversation over the short term has changed to when the cuts start, I don't think that there is any serious discussion of whether they will happen at all. So the trajectory, I think, very clearly tilted lower still, and just a matter of the timing being pushed perhaps incrementally further.
All right, another topic in celebration of the Fund Managers Association of the Philippines. We're putting out important issues and initiatives affecting investors, investments, and even fund managers, a few of which are, of course, reforms in the capital markets. This includes decreasing the commission and broker fees, as well as taxes. Are you seeing advances now as a result of these reforms?
Well, I think, as you pointed out, there was a recent announcement from the SEC on an adjustment or the removal of the minimum broker commission. I think certainly over the longer term that will be market positive for trading liquidity and market depth. But actually, as a letter that the PSEI, or the Philippine Association of Securities Brokers and Dealers, sent recently in response to that, for it to have a really significant or meaningful impact, ideally it's also accompanied with other reforms and not taken in isolation. So I think the hope is that certain planned reforms, which are already present in the existing form of the PFITA package, are hopefully accelerated. Maybe pointing out the lowering of the stock transaction tax, currently sitting at 0.6%, to something lower. I believe over the long term the target is 0.10% or 10 basis points. But if there's a chance that particular reform can happen sooner, or at a more accelerated pace than was originally planned, then that, taken in combination with the recent announcement of broker fees, will be a significant reduction in friction costs, and I think quite a significant boon to potential trading activity.
Okay, although I know this is not a unique problem to the Philippine market, I'm sure a lot of emerging markets are also in dire need of foreign funds. Now, which reform do you think should be necessary to, make our capital markets attractive again to foreign funds?
I think ultimately, at least anecdotally also, based on all the conversations I've had with foreign investors, they really just highlight continuously two major topics. One is liquidity, and the other is efficiency or friction costs. So liquidity, of course, is a bit chicken and egg. Unless they come in more significantly, then it stays very much a shallow pool or small pool, so to speak. So what they've highlighted is, in order for them to come in, one of the things they're looking at are, of course, friction costs. Lowering the tax on withholding tax for bonds and on dividends for equity securities, I think would definitely be a step in the right direction. These are also reforms being taken up in the current iteration of the PIFITA package. So hopefully these are accelerated. There's a chance that they will push through. I do think that those will be significant factors with respect to raising our relative value in the consideration of foreign investors. And then, as we already discussed earlier, the lowering of other friction costs is also potentially a significant consideration for them as well. The moment we lower these barriers to entry, particularly against our regional peers, which have generally lower taxation rates, lower fee rates, and lower transaction costs, then we become far more competitive with them and more enticing, I think.
And lastly, Jose Miguel, on the flip side of that is, of course, local investors, Filipinos. Is there anything else the regulators can do to open the markets to more retail investors in the Philippines?
Actually, I think the regulators have been very supportive, particularly over the last few years, on their efforts, particularly to increase market depth or penetration. I guess some things that are already being moved on, but that we hope improves even further or is accelerated are the PERA initiative of the BSP, pension reform initiatives, which, apart from making market penetration larger and increasing market liquidity, makes that money a bit stickier because it is longer term money in the service of saving up for one's retirement. So maybe more focus on those even from the private sector on from an educational standpoint. What else? I guess that would be kind of where I think the crux would be, or the
All right. On that note, we thank you so much for joining us this morning, Jose Miguel Liboro of Atram Trust Corporation. Have a great day.
Thank you.